Going on, people? Luke here from LAGFX. We're back today with a new case studies video. In today's video, we are going to be going over the NAS100. If you don't know what the NAS100 is, it is basically short for NASDAQ100, which are the leading US stock indexes. It's basically comprised of 102 of the largest non-financial companies listed on the NASDAQ exchange. So today I thought I would go ahead and do a full case study video on this pair and give you my bias and my opinion moving forward for this market. And I found that actually the way that this market is respected in terms of supply and demand and my way of trading itself is perfect. So this may be a new pair that I actually take under my belt and start to trade maybe on more of a regular basis. If you are at all familiar with LAGFX, me as a trader, you'll know that I don't really dabble in any of these types of markets. As I say, the stock indexes, things of that nature. I usually focus on precious metals like gold or our major Forex pairs, looking at the US dollar and the Great British pound, things of that nature. So yeah, this will be an interesting turn of events and maybe something that we can really push towards in the future. As I say, after doing some extensive research and analysing of this market, I have found that my way of trading and the strategy itself plays part and parcel with the movements that this market creates. So I'm excited to jump straight into this video. If you guys do enjoy this video and you learn something from this, you learn a little bit more about my way of trading, the strategy itself. If you find potential trading setups from this video and you profit in the coming weeks, then don't forget to leave this video a thumbs up. All the support you guys provide is very much appreciated. And if you have any questions or queries regarding my analysis, my way of trading, the business itself, LAGFX, then please leave them in the comments below and I'll be more than happy to get back to you if and when I can. Now, with all that being said, let's jump straight into today's case study video. Okay, so jumping straight into today's video, the first thing we need to decipher is the overall direction of the market, what the prevailing trend is. As we can see here, looking at the weekly time frame, we get an overall scope of this market, and we can clearly see that this is a bullish market. Therefore, we should be looking for those buy opportunities as we want to be trading with the prevailing trend. So with that being said, what we should be looking for realistically is areas of demand that we can actually get introduced into this market from. So the best thing that we can do is actually look at the most recent impulsive wave. Now, what we are seeing here at the moment, if we just mark out this structure, we can see here that we have an impulse followed by a correction, and this would maybe suggest that it's an impulse, but I'm actually thinking this is part of the corrective wave that's probably going to trade us lower before taking us higher. So I'm expecting further bearishness in this market to trade us down before actually taking us higher in this market longer term. So, and I'm going to get into why I feel like this is going to be the case as we go down and as we dive deeper into this market. But the first thing we should be doing is actually looking at what the structure is providing us with. So we can see here that we have an impulse followed by some kind of correction, and this would be seen as the next impulsive wave. But what we're seeing is prices traded up into this area and is actually showing signs of rejection to the downside. So if we just head down to the daily time frame, we can see here that the last protected low within this bullish structure has actually been broken, which is what tells me that price is actually looking to put in a corrective wave. If you wanted to go from here, or even if you wanted to go from here, you would argue that this is still a break of structure. A lot of people will say, oh, well, you know, we're looking at wicks and therefore it's not a valid break of structure. I would argue against that, and I would say this is a valid break of structure. And plus, we do actually have a candle that actually trades below that. So this is a clear, valid break of structure to the downside, which gives us the suggestion that this bullishness has come to an end, and what we're going to see is actually a corrective wave continuing to trade us lower in this market. So that's our first suggestion, that price is potentially looking to go bearish. Now, there is a reason why price has traded up to this point and then continued to show signs of bearishness. And it's because price has traded into an area that has been left unmitigated within this wave here. So if we just go down on time frames, looking here at the 4 hours, we can see how actually where we've drawn this line, there is a clear order block that has been left over that again has been left unmitigated. So we could argue that price was coming to trade up and into this to grab any remaining supply in order to continue trading price lower. So if we just drag this all the way across, you'll see how price perfectly comes to trade into this. And since trading into this, we have seen good signs of bearish structure. So that is our second point and second reason as to why we feel price may be looking to reverse to the downside. Now on top of this, if we go back to the weekly time frame and we zoom into this market, I would beg to differ that our correction is this shallow. I feel price would provide us with a deeper corrective wave before taking us higher in this market, as it's only right within the laws of structure, essentially. At the end of the day, this would be the first corrective wave, so I would argue that price is only going to dig this shallow before taking off to the upside. So there are many things that we could use as confluence to suggest price is running out of demand, which is obviously trading price higher and is having to trade us lower to grab more demand from this initial impulsive wave to the upside. So now that I have that scope on things and I feel price is ready to put in that corrective wave to trade us lower, what we can do is we can look at this impulsive wave for any areas that have been left unmitigated, any areas of demand that could give us that S&D flip once a penetration has been presented. So what I like to do is, just looking here on the weekly time frame, is to try and find any areas that price may have not cleared. So everything looks okay as of now. If we just continue to look, we could say maybe this, but price actually comes to put in a bullish engulfing candle, which actually comes to mitigate all of that. So I would argue that that's actually okay. That's been cleared. The only area that really stands out for me is this red candle here. Reason being is because nothing comes to actually trade into that, and that has been left unmitigated. As we drag this across and we zoom back out, if we were to then redraw this model and this bullish structure, it would actually seem to somewhat make sense. So if we draw this out here, we can see that this is nice and linear, and it provides us with clear bullish structure. So I would argue that this is a good area that we could see price trade down into before ultimately taking us higher and breaking these previous highs that have been set in this market. So that is definitely an area of demand and somewhere that I will be looking to go long from, assuming we are delivered with this bearish structure that's trading us lower. And obviously with us having this bias, we aren't set in our ways. Obviously we have just been delivered with multiple pieces of confluence, and our bias will build based on time and data that is delivered to us. So this may be my bias at the moment, but things can quite easily change if we are delivered with further bullish structure, or my bias could be further strengthened if we are delivered with a continued amount of bearishness. So what I'm going to do is highlight this out as a potential area of demand. Perfect. So now that we have this marked out, you guys can pause the video and mark it out for yourself. This is on the weekly time frame. It is this last sell to buy region within this red candle here. Highlight out for yourself as a potential area to go long from with a longer term bias. So that gives us an area to buy from, and it also gives us a take profit target if we're looking to actually go short in this market. So this is great that we have marked this out. Now what I like to do is go back down to the daily time frames and build a bigger picture as to what's going on. So we've had the penetration of a supply zone. We've been delivered with a break of structure after this penetration, which tells us that enough supply is being introduced to actually break this bullish structure, which is two pieces of confluence to suggest a reversal to the downside. And now what we need to do is we need to look at the impulsive wave that broke the structure to find areas for price to come to set a lower high. Okay, so we need to find another fractal supply zone within the impulsive wave, being from here to here, as areas that price could pull back up into to set that lower high before continuing in this bearish way. So there's nothing that really stands out for me at the moment. I would maybe argue that this gap in the market could be somewhere potentially, but if we just go down to the 4 hours now, getting a better picture of this structure, we can really start to build build that bias and build that data from what's being put in. So again, there's nothing that I feel has been unmitigated. There is some inefficiency here. So the more that we go down in timeframes, the more that will present itself in a clearer way. So let's just go down to the 30 minutes. And you can see that the lower the timeframes we go, the more that presents itself to us. So there is a gap in this market that I would argue price may need to come and trade into to clear. But we are left with this buy to sell region where price hasn't actually come to clear that in previous time. So as we go down on timeframes, we are delivered with more and more data. You will see here that we are actually presented with a clear last buy to sell region. So I am going to highlight this as a potential area that price has come to trade into, this one here. And there is also this as well that we could look as a potential area. We could also argue that this wick here of this candle will have presented us with some kind of bullishness before taking us lower in this market, because in order for this wick to be created, there must have been some kind of bullish structure to push price up before trading us lower. So we could argue that this is a potential area as well. We drag this across also. Okay, perfect. So we can see here that price has actually traded into this zone, this area in price, and has since delivered us with some clear bearish structure. So this is brilliant. This is what we are looking for. We wanted to see some kind of area of supply to be respected and to deliver us with some kind of bearishness. So we can see here that this would be seen as the last protected low within this time frame. So if we just head to the 15 minutes, I would still argue that this is the last protected low within this bullish structure that traded us up and into this market. So price has clearly broken structure after penetrating this zone, so perfect. We could then look at this as an impulsive wave to find areas to then again enter in potential shorts. And as we have seen, price has then delivered us with further bearishness in this market. So as we are going down on timeframes, we are building more and more of a bias that this market is actually in preparation to take that down move, to trade us into that demand zone that we found earlier on in this video. So what we could do now is again look at this impulsive wave for any areas that have been left unmitigated within this market. So let's just have a look and see if we can find anything. So as we look at this impulsive wave that broke structure to the downside, I would argue realistically that there isn't anything that clearly portrays itself as an area that's been left unmitigated. We could say that from this candle here to the top of the wick that follows would be some kind of bullishness, and price does come to trade into that perfectly. So that's another area where supply is being respected, so that's brilliant. But then we would look at this and unfortunately, because I can't go down to timeframes lower than 1 minute, we are actually delivered with very little information. The only thing that I would argue is within this 1 minute candle, there would have been some kind of bullishness. Price was to then close here. So within that would have been some kind of gap and some kind of bearishness, where again suggesting that there could be some kind of order block, just because price has opened here and taken a straight nosedive down and closed down here. So I would argue that if you're someone that looks for fair value gaps, we would argue that this could be a potential area where a fair value gap is present. So we could drag this across. Yes, we have a penetration here, but price can quite easily come to sweep these zones in order to grab further supply. So let's just see what happens. So you can see here that price comes to trade into this perfectly and delivers us with further bearishness to the downside. So I'm going to get rid of these now, just because we have found the area of supply that price came to trade into. And again, all we do is we look at the last protected high that price traded up into. And again, all we do is we look at the last protected high before price went on to trade lower, and we would say that it was this one here. So this would be the break of structure. And at this point, we are now looking at this market on the 1 minute time frame. So I would argue that as soon as price has broken structure to the downside here, we have all confluence that we need in order to suggest further bearishness as a longer term bias. So I could have placed a short position here just because we have found 3 areas of supply. This being one, this being our second, And then our third was obviously the higher time frame supply zone that price came to trade into originally. So we have one supply zone, two supply zones, three supply zones. So I'd now argue that we have all pieces of confluence to suggest bearishness with a longer term bias. Okay, so now when it comes to placing a position, either you can wait for price to break structure. Once we've been delivered that, we would obviously set our stop loss a few pips above the zone that we were entering in from, and then our take profit would then be set at the higher time frame swing low. So I'd then probably trade price all the way down, because we actually do want to see price trade down and into this higher time frame demand zone that's present. We can see here how we are provided with an extremely beneficial risk to reward ratio. However, if you are someone that is not looking to be stuck within a trade for a long period of time, you could maybe look to get reintroduced as price trades on within this market. Now you'll notice that as I drag price across, our stop loss becomes close to being struck, but it never actually gets hit, and that's because we followed the rule of setting our take profit a few pips above any supply zone that we get involved from and below any demand zone that we get involved from. And you can see that we are avoided from this sweep within the market, and we do actually avoid being taken out within this market. So if we had gone present and actually placed any short positions from this area in price, we would be well on our way to some amazing profits within this market. I think this trade is currently running. If we were to have placed this, let's just double check. It's peaked at 8 RR already, which is amazing. So someone who's risking 1%, you're looking at 8% returns. If you're risking 2%, you're looking at 16% returns within this market. Now, obviously, we haven't been introduced into this market. We haven't executed any positions. So how can we look to get involved in the coming week? Well, you can see here that we are delivered with a wick, and then price comes to close up here, and then we are delivered with that large move down. So I'd argue that within this wick of this candle, there are going to be areas that have been left unmitigated, last buy to sell region. So there's going to be some kind of green candles within this, and as we go down time frames, we will be able to decipher it and actually see those. So this is an area that I am definitely looking for price to come to trade up and into before delivering us with some further bearishness. And again here as well, we also have this as a last buy to sell region. Price comes to deliver us with some bullish structure or some bullish candles, should I say, before delivering us with some clear bearishness. And this area in price has again been left unmitigated. But if we just go down to the lower time frames, let's see if this area actually presents itself to us as a clear area of supply. So you can see here that when we go down in time frames, the green candles do actually go on to present themselves, and we can actually refine this zone to this here. So this candle is what I actually have in mind. So beyond this, we have a fair value gap. We have inefficient structure present in the market, so price needs to come and clear this regardless. And then on top of this, we have this as an order block as well. Price has come to close, and then we have a straight drop to the downside. Price hasn't come to clear this area. So I would love to see price come to trade up and into this. Now, when it comes to further refining the second zone that we are looking at, zoom in on this, we can look to refine this as an area as well. So I would actually argue that it could be anywhere between here, being this, and also this here. So we could actually refine it to just these two places in price. Everywhere else, I would argue, that has been mitigated and has been cleared of any inefficient structure. So we can further refine that zone as well. So now we are left with two areas to potentially go short from in this bearish market. And you can see here how we are delivered with clear bearish structure. So why wouldn't we want to be presented with some clear opportunities to get involved in some bearishness? Now, obviously, if price was to trade into here to follow with a lower low, then that would be clear bearish structure. That's brilliant. We've got a high set, a low, a lower high, lower low, lower high, lower low. So this is clear bearish structure. Now, you may argue, well, if price actually comes to trade above and beyond this, and actually trades up and into this zone that's up here, would that not be breaking the laws of bullish structure? Well, we would then argue that the high that is set here was actually just part of this impulsive wave, and this is the market's way of manipulating traders. So if we just go back up to the 5-minute time frames just to make this a bit easier to see, we would say, well, actually this was the impulse, this is the correction, and the impulse is what would follow. So if we just change this, you can see that if we were to get rid of that, this was the entire impulse, this is the corrective wave, and this is the impulsive wave. That is still clear bearish structure. So in actual fact, this would just be a way of the markets manipulating those retail traders. So we've got these two areas that I am definitely looking to go short in. What I will do for you all is I will highlight these out, giving you guys the exact areas in price. And I would suggest that you guys go and mark these areas out for yourself. Perfect. So I've given you those two areas there that we can definitely use as potential areas to short from, to trade price all the way down and into this higher time frame demand zone, where we would then be looking to obviously trade price higher, going on to create its next higher high within this market. Because as we know, this market is clearly a bullish one. I'm just expecting price to put in this corrective wave before actually taking us higher within this market. And you can see here that would still be following the laws of bullishness on the extreme higher time frame structure, but we are still following the laws of bearishness within this fractal structure here. You can see that price would continue trading us down before taking us up. This here represents this corrective wave, and this what follows would be the impulsive wave that follows. So it's very important that our higher time frame bias coincides with our lower time frame bias, and all structure coincides with one another, because if it doesn't, then that's when there are going to be anomalies and there are going to be things wrong with the trades that you are placing. So just to summarize within this analysis, this is 100% a bullish market, and I am definitely looking to go long within this market as a higher time frame and a longer term bias. But at the moment, I feel price is actually within a corrective wave, and I am expecting price to go on to put in further bearishness that should trade us down and into the 8,000 region before trading us up and beyond the 15,000 region. So definitely looking to go short at the moment, traders all the way down, and then I'll be looking to go long. So we could be looking for some bearishness and some supply zones in order to get involved in these shorts. Once prices actually traded us down, we can then obviously prepare for that next impulsive wave that takes price higher. But ultimately, I am looking for short positions within this market. So that is my case study completed within the NAS100. Again, it is a market that seems to be respecting these areas of supply and demand very well. Price has given us a clear bias and a clear direction to trade in. The fact that price has traded into a clear supply zone, delivered us with a break of structure to the downside, that is enough evidence in itself that I would be looking for shorts anyway. Now we've seen price react well to another supply zone and give us another break of structure to the downside. So we've got one break of structure, two break of structure. We've got a penetration of one supply zone, two supply zones, and now when we go more fractally, we have the penetration of a third supply zone followed by further bearishness. So now I am literally looking to just get involved in these shorts as soon as price trades us into one of two fractal supply zones that I marked out for you guys earlier on in this video. So if you guys have any questions, any queries regarding my analysis, my thoughts on this market, please leave them in the comments below. If you agree with me, perfect. If you don't agree with me, perfect. Leave them in the comments below. Let's have a dispute. Let's have a discussion about this. Yeah, let's find some good opportunities in the coming weeks for profitable positions, and let's take full advantage of this market. I hope you guys have enjoyed this video. As I said, if you have done, please leave it a thumbs up. And like I mentioned before, if you have any questions, please leave them in the comments below. And if you aren't involved in the Learning Lounge group chat, get yourself involved, because there is so much content on there. And there are so many opportunities that are provided to us on a daily basis that I share with the people over in the Learning Lounge group chat that you don't want to miss. I've just opened up a community channel as well within Telegram, where I give the clients of LAGFX, as well as the people that follow us and what we do, the opportunity to have discussions and to provide analysis and to learn between one another. So if you are looking for a community of Forex traders with a like-minded mindset, then get yourself involved in that as well. That will be open to the public by the time this video has been published. But yeah, just to wrap this video up, I hope you guys have enjoyed. If you have any other markets that you want to see me analyze, again, leave them in the comments below and I'll be sure to do that. Thank you guys for watching, and I'll catch you all in the next one.